Hello and welcome to the Business of Property podcast. I'm Stuart.
And I'm Simon.
We're both property people running our own businesses, and this podcast is just us chatting, as most of you would know, about anything and everything property. And this week, we thought we'd just start with a couple of updates, Simon. So you were in the throes of selling your property. And the last time we spoke on podcast, there was a damp survey, and we usually all know what's coming down the pipe when that happens, that there's going to be an element of negotiation. So this is going to be news to me as well. So can you share with us what's happening?
Certainly can. And I'm very pleased to report that it was better news than expected, which is, well, rare, I think. The damp survey went ahead and came back as, yes, there is some damp, but it was more minor than the sort of first more general survey suggested it might be. And most critically for our buyer, they concluded that the remedial work would be something that could be done while the property was being lived in, which was the main thing our buyer was concerned about. So they have come back and said that the damp's not a problem. Let's carry on, and all is good. They'll sort it out afterwards, and there was no mention of a renegotiation at all.
Amazing.
Indeed. Although we think, I think there's sort of perhaps two elements to that. One is that our buyer has now completed on their sale. So they are currently in temporary accommodation. So they're quite keen to progress with the purchase and get that completed, in fact. And the other thing is that property prices in most of the country actually, but property prices particularly in the area where this house is, seem to have been going up in the last 2-3 months since the sale process started. And hence, if there was to be a renegotiation, sort of a rocking of the boat, there's potential actually that we could turn around and say, well, actually, the property might be worth 25,000 more now. So maybe we should renegotiate the other way. And we would actually have a reasonable sort of leg to stand on for that argument. So I think perhaps the buyer is aware of that and hence is not wanting to open that potential can of worms too much.
Well, I think the big one is obviously the stamp duty holiday and any fly in the ointment.
Yeah, I mean, I'm in two minds about this. So from the buyer's point of view, if we carry on with this sale, or in fact from everyone's point of view, if we carry on with this sale, we are currently in a good position, actually, probably to complete before Christmas. And even if it wasn't before Christmas because we had to renegotiate or whatever, we'd still be looking at completing well within the deadline for the stamp duty holiday. However, if we had to go back to market, then you're absolutely right. Whoever our new buyers would be at significant risk of not making it in time for that stamp duty holiday. So we would certainly be taking a risk, I think, if we tried to push the sort of renegotiation or any renegotiation in the other direction. Because of course our sort of backup plan is, we'll go back to the market, which is now higher than it was. But of course, that may not last very long at all as the deadline looms harder. So yes, I don't know. I'm not going to overthink it though. Damp survey came back positively.
Yeah, it's good news.
Our sale is carrying on. Our buyer is keen to progress fairly quickly, hopefully completion before Christmas. The other element to this, of course, is that we have a tenant in the property. And we've been talking to them, and they are actually buying themselves. So that's been progressing. And in fact, I think actually at this point, they have exchanged, and I think they might have actually completed by now, or it's any day now, basically, their completion. So that's all set. They've told us when they're going to actually move out. They're going to have a little bit of an overlap between their rental of our property and the purchase of their new property, so they can obviously take a bit of time moving and cleaning and bits and bobs. But that's all lining up quite nicely. It's looking good. The property will be empty and ready for our buyer, and we should be all set to go ahead, which is all excellent news. And then I opened a spreadsheet and started looking at the sort of financial elements of this. And the thing I was looking at was sort of what this sale is going to cost. And with solicitors, agent fees, and of course the dreaded capital gains tax, between my brother and I, we're going to be looking at a sale cost over £100,000, over £120,000, which is quite a lot. So most of this is due to capital gains and the fact that we've owned this property for a long time. So the capital gains is quite big, and hence the capital gains tax is quite big. But it also got me thinking that if we had a high loan to value mortgage on this property and we were selling it at this point, we could actually be quite easily in a situation where our cost of sales would eat up more than the equity we had in the property, which is quite a scary thought, and something that I'd never really sort of considered keeping an eye on before, making sure that the equity after selling expenses and capital gains tax, making sure that is actually high enough to cover everything. So yeah, interesting, but yes, an expensive sale, but in the end, worth it. And we will be starting the new year looking for new property to invest in.
Yeah, it's something we've looked at quite a lot recently because of the flat we're selling, but we have always had half an eye on the CGT because of the value that it's increased by. Have you had an accountant work out your CGT yet?
No, at the moment this is just sort of back of an envelope or back of a spreadsheet calculations, just done by myself.
Yeah, well, you probably need my wife because she worked out ours on the flat we're selling, and I then got the accountant to do it, and I think she was something like £400 out on what we were doing. So she can obviously do
pretty close.
I suppose the flip side is obviously if you're paying a lot of CGT, that's a lot of increase. So it's a double-edged sword, isn't it? It's a good increase. It's always, well, it's an eye-watering amount, full stop, but it's always painful when it's going straight to Mr. Taxman.
Yeah, quite. It's yes, as you say, a big chunk to take off the top of the money we're getting back. But anyway, it's still worthwhile and still enabling us to reinvest and find something that has a higher return.
And you own that 50-50 with your brother?
Yep. Indeed.
So you both get at least those tax savings shared, your tax allowances and...
Yes, indeed. We get to take advantage of 2 lots of capital gains tax relief and what have you. So yes, it's not bad. And indeed, I mean, paying tax on income effectively is how the world works. So it's not to be unexpected or disastrous really. But
no.
Yeah, the numbers just sound big.
Yeah, it just doesn't make it any less painful, unfortunately. Well, on my update, unfortunately, is not as good. Well, it's not good news at all. So we were in the throes of selling our studio flat, which we'd agreed a figure of 250,000 on, and that was with an investor buyer. And they have had the bank value it, and the bank has valued it at 230,000. So that's left the buyer and ourselves in a bit of a situation, because I guess the big challenge for me about this is that a surveyor has come along and said, we don't value this property at the purchase price, which for me really goes against the market force, because at that stage, the market has agreed that is the price, because we are selling it for a price which someone has agreed upon. Therefore, in my inexperienced eyes, that is the value, that is the market value. And we also know, because it's one of 6 flats in an old Victorian building, that with a previous one having sold for 260,000 nearly a couple of years ago, albeit a couple of years ago, we know that we are perfectly in the right ballpark. And there's another flat for sale in the building which is not as nice as ours at all, which is about 10,000, priced about 10,000 lower. So we know we're well in the right ballpark. So it's been a frustration. We did have a bit of a negotiation on it, and that, unfortunately, the vendor seems to have disappeared. So not the vendor, we're the vendors. The buyer has now just gone MIA, which is strange, because immediately they did offer more than what the bank had valued for it, insofar as they said, well, we will pay you an extra XK outside of this, which we negotiated on and said, look, we will meet you at this point. I don't want to share all the details.
No, fair enough.
For obvious reasons at this point in time, which we came back with what we thought was a fair offer. But sadly, we've now found ourselves back on the market because the potential buyer has disappeared. And again, the agent probably hasn't covered themselves in huge amounts of glory, because we've had to do a lot of chasing. And I accept that that's probably around the fact that the buyer has gone MIA, but a few decisions got made without sort of communicating with us, which we weren't overly happy with. But look, it's a negative situation, and at least the agent has been proactive in getting this back on the market ASAP. So, but obviously, given where we're at pre-Christmas, we're not overly hopeful of movement.
It's a bit frustrating, isn't it? But I've seen lots of things in the property press of late, though, saying that the property market is still booming, and there hasn't been a sort of regular pre-Christmas slowdown yet, which is strange, because it goes contrary to what Emma was talking to us about recently, and it also seems to go contrary to sort of what I'm seeing in terms of fewer properties coming onto the market and more properties seeing sort of price reductions and things. So I don't know what to believe, really. There's conflicting indicators.
I've always found it frustrating. Obviously, it's acutely frustrating when you're in at the coalface and you're about to sell a property. And of course, I'm not going to be particularly objective on it at this point in time, but it does frustrate me, because I think even if you're trying to bake in and be conservative on your valuation, on this particular purchase, we know that the loan to value was quite low, and let's say we know it was under 75%. So assuming it was around 65, which is where I think it was 65 or 70, the bank's exposure is lower than typically would be on a purchase anyway. So they've already got that. They know that the purchaser is in for at least 30% of that value. And of course, they've got a first charge mortgage. So if the world ends and property prices crash, then they're still in a very good position. The property itself, as I've said on this podcast 101 times, is it's a great little property in a fantastic location. We went there on the weekend with the kids we checked out the property empty. The tenant had already left because of everything that's going on, so we just walked around it, make sure it was happy, and tenants treated it really well. And where the property is, we then walked, and we were 5 minutes, we're walking along the Thames with the kids. So it's a beautiful location in Kingston, right near the train station as well. So for a valuer to come along and say, no, we're going to value this more than 10% lower than what someone's agreed a price on, even though there's recent sales, is very hard to stomach. But stomach it we have to.
It just seems so arbitrary as well, doesn't it? Because, as you say, the evidence seems to support your price. You've got comparables sold not that long ago. You've got another comparable on the market for a similar amount. And then, of course, most significantly, you've got someone having offered your price and actually sort of committed to that valuation. And then for a bank valuer to come along, presumably with instructions to be as pessimistic as possible, to come along and arbitrarily knock a chunk off. It's yes, not ideal.
It's not, and it gets frustrating because the longer I work with banks, and of course I still have to work with them, so I shouldn't be too derogatory, but sometimes common sense and logic leaves the window. And again, I've worked with some good banks and some in inverted commas, smaller banks that have been a bit more flexible. But when it comes to certain points and they're immovable on things like this, it defies logic. But as we know in the property game, these are the sort of things that you have to be able to accept, swallow, and move forward. And that's what we're doing. So we've just gone straight back on the market, and we'll keep marching forward.
Yeah, has it been on long enough to see if there's been any interest yet, or is it too early days?
It's probably too early. We probably need to check in today to find out if there's been any new interest on it. But with regards to what Emma said and what we've heard before, we know that there's now a big push from Boxing Day onwards as well. So hopefully we'll benefit from that, and hopefully someone would want to benefit from that stamp duty holiday. And fingers crossed they won't want to use the same bank.
Yeah, indeed. And you are going to be testing the stamp duty holiday deadline, aren't you? Very much. It's, you're going to be trying to start and finish within the 3 month sort of average completion time. So, well, unless you manage to get an offer later in December, then slightly over 3 months. But
yeah. And there, I guess it moves on to the more macro factors about what will happen to the property market post stamp duty. Because my view would be, if there is no movement in January, it's obviously not going to happen pre. So do we take it off and then put it back on, at the end of February or beginning of March, just so everyone's clear that it's, because unlike some properties that we've viewed or have looked at, we haven't baked in savings into the purchase price. We are selling it for the price that we think it's valued at, and therefore there is a very real term saving for any potential purchaser, unlike properties that I've looked at for myself, where we were even told quite overtly, well, the price is an extra 13k because we
want the money that you would have paid to the taxman instead.
Yeah, and the rationale was that, well, it's fine because you're not paying it and you're borrowing money, so you don't have to worry about it. So as is so the price, as far as I'm concerned, will not change. Of course, the market might say different, but based on location, I don't see that.
Yeah, I wonder what the banks are trying to build in with these down valuations. Whether they really think the coming recession is going to cause a market crash, or whether they think ongoing COVID problems are just going to slow the market, or whether they think the deadline from stamp duty is going to cause a real problem. I mean, I think most of these potentials will probably have sort of counterbalances taken by the government and things to try and maintain the property market through them. I mean, presumably the banks are considering that and coming down on with the conclusion that those countermeasures just aren't going to be enough. Yeah.
Or if you're going to be uber cynical, you could argue that maybe they are just putting the brakes on sales going through at the highest level, just trying to mitigate. I don't see that in this particular instance, but there is an argument to say, from what I've seen, what you've seen anecdotally, that, and from what Emma has told us about how busy we all know the market will be, where they're just trying to put the brakes on it, and that uber conservative valuations are just part of that. People, trying to slow everything down.
Yeah, but if they, I'm not even sure why they would want to slow it down. I mean, is that because they're wanting to lend less money? Is it because they're wanting to reduce the load on their staff? Is it? I mean, I don't understand how that makes sense. Why would you want to slow the market down in such a way that you're actually cutting yourself off from potential business as these various sales inevitably fall through a bit? Or if they don't fall through, all of these valuations, these lower valuations, trickle through into the stats and the market and the sentiment, and they actually forcibly create a reduction in the property values. Yeah, so it's I'm confused.
I think it would be more around them not wanting to to make mistakes. So saying, and I'm not sure, there's directives that say, right, the value at 10%. I'm not being that cynical. I don't think there's necessarily that going on. But to be more conservative, because at a time where there is so much going through, and we know that it's very hard to get a 90% mortgage because the banks are becoming more risk averse. And it's just a function of that, saying if we've got so much to do, what we don't want to do is put ourselves in a position in a year's time where we've got a lot of finance on the books, that worst case scenario in certain areas, if the values did drop by 5%, let's say 5% for argument's sake, where all of a sudden they're in a situation where there could be potentials for negative equity, or in situations where people are in difficult circumstances. So, but you and I can only speculate. We have no idea, really.
No, indeed. And it's the future, so nobody really has any idea how it's actually going to turn out. And the banks don't really know. They're being extra risk averse, as you said. I think that's sort of the key, isn't it? They're just being ultra careful in their actions, even though those actions may actually be self-fulfilling. Yes, we will have to wait and see.
Yeah, we've seen it before, and no doubt we'll see it again. And the news for anyone in property is that this is what we have to contend with. And the thing that I've always found across the years, and I'm sure lots of people will agree, is that ultimately it's about how we solve the problems. Because if we're presented with problems, we got a big one on the Croydon flat that we're selling, where we've had to knock 50 grand off the asking price, but that was because of an external wall survey. We're then left with choices. Do we hold? Do we still try and sell it to a cash buyer? We did, and we've got a cash buyer. So I think for anyone that what comes out of this is don't see these as barriers or blocks. And I'm just trying to bring this back to the positive side of things, which is, as we know, we've just got to keep putting one foot in front of the other, and the decision now lies with us, which is we're going to try and sell the property again. We're not going to change the value, and we'll see what comes of that, and keep moving forward. So I think these things will come up, and I think, as you've said, we can't know the future. We can make guesstimates and we can stay close to what's happening, but in terms of control, we have limited control.
So yes, I will wish you luck in your remarketing of that property, and hope it sells again rapidly. On the EWS1 point, so that's the external wall survey certification.
Oh, you were doing so well.
It had to go wrong somewhere. And I've heard something recently that I think it's the government working with surveyors have now officially said that blocks of flats that don't have any external cladding don't need an EWS1 form. So that should alleviate concerns and sort of mortgageability issues for an awful lot. I think it's 450,000 people or something were supposedly affected by this, where you had to get a form even though you didn't actually have any cladding.
I mean, you do have to laugh, don't you? It just reminds me of Catch-22. If anyone's read Catch-22 by Joseph Heller, it could be straight out of that book to say, if a building doesn't have any external cladding, you now don't need an external wall survey for cladding. Well, who knew?
Right. Although to add an extra twist to it, the article I was reading about this said that while the government had announced this, the immediate response from mortgage companies was, "What? Nobody told us." No, we still need the forms. So who knows? Hopefully that will get sorted out as well imminently, and it should be better news for people trying to sell in blocks of flats without any actual cladding.
Let's hope so.
Yes, indeed. And just to finish up before we conclude, we are out of time, which we are really. I just noticed while we were talking towards the end there that in this podcast recording system that we use, your name today, which I think has probably been auto-generated rather than you entering, is Energetic Astronaut, which was just a brilliant name. I love that.
I've got some energy today. Not sure about the astronaut.
I'm not sure having too much energy as an astronaut would actually be that useful, because you can't go very far. I mean, if you're in a rocket, that's very contained. If you're in the space station, you've got a bit more space. But yeah, I don't know. Although I think they have sort of exercise machines and things up in the space station, don't they? That they use to actually keep fit, even though they obviously can't go very far.
I believe they do.
Anyway, we've been a little distracted, and I should let you round up the end of the podcast, since we're over time.
Yeah, well, thanks everyone for listening. We genuinely appreciate you listening to the show. And if you are enjoying it, please do leave us a rating or review on whichever podcast platform you listen to. We'd love it and appreciate it, and helps us get the message out there. And of course, as always, if you want to, I'm not sure what links we'll have from this show, but typically anything we talk about with any use of any links will be at thebusinessofproperty.com, and you can see all of our back catalogue there as well. Until the next episode.